Good evening, everyone. Thank you very much for tuning in. Welcome to BSC News Live, where we talk about the latest and greatest crypto news. And what a weekend it's been. Full of volatility. There was some opportunity to have some very good trades. If you had, well, not sure how PC this is, but if you had the balls to make those trades, and we'll look at a couple in a moment. But as the little stream thumbnail says, what happened. We're going to be looking at what happened over the weekend. Obviously, there was a few DPEGs, DAI, and also USDC went down in value. USDT on a few exchanges went up in value to around $1.10, which was very interesting. Before we get to that, I'm just going to quickly share a chart. So a lot of what I'll be sharing can be found easily just on TradingView. So at the moment, these two lines, the blue one is the S&P 500, and the white one is the FTSE 100. So essentially, America, average stock market, and UK average stock market, and we can see that historically they pretty much move in parity with each other. Occasionally they do come apart, but it's nothing huge, and they're pretty similar. If we add in Bitcoin, again we can see a lot of similarities there. Obviously, there are times when crypto has been a lot more volatile. For example, perhaps things like FTX, which didn't perhaps affect the traditional markets that much, but obviously it did affect crypto. However, what we can see happening at the moment, which is very interesting, I think, is this huge pump here, whereas the traditional markets are going down. Obviously, we've had some not great news at all about very large banks essentially failing. However, crypto, well, obviously it's not great news, but crypto is doing fine. And that could be for a number of reasons. Okay, so let's get into it. So this tweet was published on the 11th of March at 3:11 a.m. UTC. And so this is from Circle, and Circle are the ones that issue the USDC stablecoin. So 2 seconds. Following the confirmation at the end of today that the wires initiated on Thursday to remove balances were not yet processed, 3.3 billion of the around 40 billion of USDC reserves remain at SVB, which is Silicon Valley Bank. And as we know, unfortunately, Silicon Valley Bank is, it's collapsing, essentially. Who knows what the final outcome will be, but things don't look too great for it. But we'll get on to more news about that in a moment, because there's been some more developments. I think HSBC have just bought it for £1 or £1, about $1.20, which is interesting. But yeah, we'll get onto that in a moment. So Circle published this tweet early morning UK time, or late in the evening in America. The second part of the tweet: like other customers and depositors who relied on SVB for banking services, Circle joins for continuity of this important bank in the US economy and will follow guidance provided by state and federal regulators. So essentially, of the $40 billion that was backing all of USDC, 3.3 billion of it was stuck at SVB. Which is a relatively small amount. I can't imagine everyone suddenly pulling out $40 billion from this bank. And ladies and gentlemen, we have some great news. So at the start of the stream, I heard a few of you sort of sigh and say, "Oh no, it's just Tom." But normally on the Monday, Ben is very busy doing other stuff. But look who it is. Welcome to the stream, Ben. How are you?
Good. I was gonna message you, but I had the link, so I figured I would just join.
Yeah, it was a great surprise. It's a
surprise.
Yeah, not only made my day, but made my week. So welcome, Ben. Yeah, just getting on to just breaking into the Circle news. I also showed, I'll just get back to it a second, this chart. Hold on a moment, which shows these. The blue line is the S&P 500. The white line is the FTSE 100. So essentially, the UK and also the American stock markets. And historically, they've moved pretty much in parity with each other, which is expected. And also historically, they've moved in relative parity with crypto or Bitcoin as well. Obviously, there's been times in Bitcoin, like here, things that don't perhaps affect the financial markets as much as the crypto markets, but do affect crypto. However, what's happened today, which is very interesting, I think, the traditional markets are suffering quite badly, but crypto, we're doing pretty well. Or it might just be a rebound, people realizing, okay, the USDC thing isn't that bad. But yeah, I thought that was quite interesting to see how much essentially people could be trusting crypto over traditional finance.
Yeah, I also wonder if you'd look into any like liquidation stats. Like, is this a massive short squeeze? You may have that in the pipeline.
Hold on.
I'm not personally understanding why some things are up 20%, like Bitcoin.
I don't either. However, there was this from CZ, but I don't think this directly affected the market price. So given the changes in stable coins and banks, Binance will convert the remaining of the 1 billion Industry Recovery Initiative funds from BUSD to native crypto, including BTC, BNB, and Ethereum. Some fund movements will occur on chain. So essentially from BUSD to, BTC, BNB, and Ethereum. So that could be one of the reasons. That was very, very early UK this morning, sort of before all the pump. And the on-chain data, hold on a second, I don't really fully understand what happened here. If it's, or how they did this. But I assume it looks just like they sent money somewhere and but CZ says it's happened, so there you go.
Short squeeze provided by Binance.
Exactly.
Brought to you by Binance.
So I'll just bring up, so these, okay, hold on a second. So it's total liquidations. And this is on the website CoinGlass. So in 1 hour, fine numbers, pennies, 4.77 million, but in 24 hours, 312 million liquidations, which is a lot. And if we look at, actually, no, I was going to see here if anything's out of the ordinary, but it's not. GMT, that's an interesting one. That run to earn one, that's in the top liquidations. Interesting. Blur has had a very hard time as well recently, which is interesting. And if we look at what people are doing on exchanges at the moment, hold on a moment, we can see that pretty much there's such a bias towards shorts,
which makes sense right now, I would think. I mean, like everything just went, if you're trying to catch like a quick trade, I don't think it would make sense to like open a long here, but
no,
so it could just be people trying to like scalp almost.
Or, the exchanges might see this and think, great time to liquidate people. Let's smash them up.
Yeah, Binance might say, we forgot to tell you about Recovery Fund 2.
Exactly.
Which will now be converted to cryptocurrency.
Indeed. But I think seeing this and seeing how many people essentially are short does explain, it could be a short squeeze that we're experiencing now. In a minute as well, I'll have on screen a liquidation map, sort of where liquidations...
I love that map.
Yeah, it is a good one. But I mean, there's lots to explore. I'll just bring up a quick overview of sort of what happened over the weekend as well. Sort of Ukraine colors in the middle. So these were the most affected cryptocurrencies over the weekend. So USDC is in blue. That wicked down to, and this is just an average on exchanges. So USDT is actually, on Gemini, but the others are, averages. So blue, USDC wicked down just below 90 cents. DAI, which is an algorithmic stablecoin, and not, to an extent, not backed by fiat. That wicked down just below 89 cents. BUSD was of the large stable tokens that the least affected. You can see it did, have small dips here and there, but it's nothing too major. USDT, that actually wicked up to nearly, just over $1.10. And you can see there's an inverse correlation between USDC and DAI there, between USDT. And I assume that's because people essentially selling their USDC DAI to USDT. However, now they're coming back together again, which is good to see. Pretty much in stable land once again. There you go.
It's good.
That's an overview.
DAI is interesting because it's 50% of the reserve is USDC.
It is. Yeah. So I've got some information about. Do you say DAI? Because I'm always a bit hesitant saying DAI.
That's how I read it in my head. So that's how I'm gonna say it here, I suppose.
A lot of places they just have a capital D, a small A, and then I. No, A. Yeah. So DAI. Okay, good. Yeah, so that's DAI as well. So it's hold on. I've got a tab up somewhere about DAI, which is operated by MakerDAO. So there are a number of ways that the DAI token stabilizes, but obviously with everyone just suddenly wanting to sell the DAI token, there was volatility. But again now, it looks fairly stable, which is good. Also, the chart for MKR, hold on just a moment. This could, if you caught that wick down there, that could have been an incredible trade. Went down to pretty much 600 and then nearly up to 1,000 again. So it's remarkable, I think, how well that's recovered, even though a lot of their collateral is in USDC, but not locked up in Silicon Valley Bank, just USDC itself. It's a rabbit hole.
It is.
Yeah. So that's MKR or MakerDAO, and the reason for that once again is because a lot of their collateral essentially was in USDC, and honestly, there's so much to explore, and recently as well. So this is on the 12th of March, last night UK. The crypto bank Signature Bank has closed, which is similar to Silicon Valley, also Silvergate, in the sense that they have dealings with, I think, Circle and also Coinbase. And that's another one that's collapsed. So Silvergate, Silicon Valley, and Signature. They all begin with S. Watch out, Santander. Yeah. So big crypto banks. I'm not sure what's going to happen in the future. Who knows? But from what you just said, that the price of Bitcoin at the moment, I do now think that's a short squeeze happening, but we'll see. Maybe it's CZ just buying loads of Bitcoin though. No one knows.
You just bought $1 billion worth when everyone was open and shorts, expecting the market to tank. Great move.
Yeah. I'm going to bring up the liquidation heat map. Hold on. That is going to take a few moments, I'm afraid, to bring that up. And by a few moments, I mean 3 seconds, because I've got it here now. So the liquidation heat map for BTC. So this is where most of the liquidations lie for Bitcoin. And again, this is essentially aggregated for exchanges as well. So liquidations for longs are right. Sorry, liquidations for shorts are all the way down there. So we'd need to drop like $5,000 to start.
No, you were right. Liquidation for shorts or for longs are down there. Because if it drops, the shorts make money.
Sorry, yeah. Okay, liquidations, for longs, there, $5,000 away. But liquidations for shorts, so close. Like if we got to, I'm just going to refresh the page because I don't know how to undo that. I think 25,300. Obviously, I'll just check that though. But yeah, if we get up to 25,300, I think we can probably expect an even more a bigger short squeeze, because that's a lot of shorts waiting to get liquidated right basically where we are. Do you think we'll go up any more? And do you think perhaps we could expect to see a short squeeze?
I have no idea. I doubt it.
Yeah.
Is anyone really piling in at this price is the question, right? It's like buying at this price.
Well, I mean, I know what you mean.
Unless Binance has another fund that they need to move into Bitcoin, I don't think we should. I would speculate we don't see a squeeze past this. That's my guess.
Well, we could see a mini, people might be getting nervous because 2,800, 2,700 is a little bit of a liquidation, so people might, cause a little bit of a short squeeze there, and then boom.
Then straight to 37,000.
Yeah, who knows? Straight to 75.
There we go.
Indeed, yeah. So yeah, that's sort of an overview of essentially what's happened this weekend with USDC, obviously Circle, MakerDAO, DAI, Silvergate, and just more recently, Signature Bank as well. There are a number of articles online as well that say, the Financial Times say regulators face question over missed warning at signs of Silicon Valley Bank. So Financial Times is saying that there were obvious red flags say essentially this was coming. And what is strange as well, these banks are regulated, and this is happening. So, I mean, regulation, it works to an extent, but what, there needs to be questions asked.
Yeah, especially it's tough, I think. I think Silicon Valley probably had the perfect storm of things, and and they're just a bank that basically services one sector, which is tech. So, if their depositors are needing to withdraw because VCs need money, or they start defaulting on loans because these startups are failing and it's hard to raise another round of funds right now. There's a lot of risk when you're kind of a single sector bank like that, as opposed to JP Morgan, which would have depositors across industries.
Yeah, they are quite niche. They've got all their eggs in one basket, so to speak.
And it's a basket that did well for a very long time, and now it's getting it's tough.
Oh, very tough. Yeah. In regards to Silicon Valley Bank, the UK branch, HSBC have bought it for £1, which is around. I
saw that.
Yeah, which is around $1.20 or so. So I'll just read a few bits. So this is from the Financial Times. So the Prime Minister and Bank of England involved in all-night calls over fate of a lender. So HSBC on Monday averted a crisis in Britain's tech sector by rescuing Silicon Valley Bank's UK arm. A fire sale sealed after all-night talks led by Prime Minister Rishi Sunak and the Bank of England. Did you know the UK Prime Minister was Rishi Sunak, Ben?
No, I thought it was that same guy. I didn't know you had a new one.
It's changed.
When did that happen?
I don't really know. It just sort of snuck up on me. They always seem to be like resigning, getting another one resigning. So yeah, now it's good old Rishi. So fingers crossed, the UK branch of Silicon Valley Bank could be okay and saved, but we'll see. A question that I have for you, Ben, that our viewers might be interested in as well. Obviously, you do a lot of you're one of BSC News's founders. You're one of the dudes. A lot of us get paid in USDC, and from like an employer's point of view, what is your view on stable tokens? What are your thoughts at the moment? What are you doing? What do you do?
That's a really good question. So I could tell you what we did, and maybe that'll lead into an answer of what we're doing. Well, you were aware that while you were sleeping, a message was sent out. I'm assuming you were sleeping. It was Friday night. Made the decision to convert all USDC that we had into USDT. We used to use BUSD, so we've had to go to BUSD to USDC to USDT. But yeah, late Friday night, had to convert our company assets into USDC. No, from USDC to USDT. And we use a PayStream service. So we had to cut those off, send what was built up, message everyone that, hey, can't tell you what to do here, but you may not want to hold this past tomorrow. We converted all of our assets. So that's what we did. I would say once the dust settles, we're going to go back to USDC.
Okay.
I think USDT is just a temporary spot to be. At the end of the day, USDC is still, fully transparent. Nothing that happened here is at the fault of USD. It's not Circle's fault that Silicon Valley Bank had to shut their doors. So in terms of choosing the right stablecoin for us to use, it still has to be the most transparent one. And that is still USDC. However, I think I said this in a company call earlier today, is we're just going to wait to see that this bank issue in the US is under control, because that'll give us confidence. Like, I don't have any question that Circle's reserves are there. They are there. It's just their ability to access them. So to me, Circle is still the play, just like BUSD was. I had no qualms with BUSD. They were just told to shut down randomly by the SEC. So we're going to go back to USDC once, we're sure that their reserves in their banks aren't going anywhere, which I think we could be sure of that at this point. However, like, if the last few months have taught us anything, you have no idea how bad this stuff can get. You just have no clue.
I know.
So, and is USDT super safe? No clue. But there's currently smoke around USDC, and there is not smoke around USDT at this moment in time.
Yeah. I've seen quite a few sort of YouTube videos and articles saying that USDT is a little bit of a ticking time bomb. I don't really know the reasons exactly, but in a way, I think USDT is too big to fail. If that failed, it would be catastrophic.
What's the market cap of USDT?
Let's have a look. Hold on.
I do agree, though. Like,
so
72 billion.
Yeah.
Holy smokes! Good lord.
Yeah, and USDC. Just over half of that, so 40. And
really, that's basically where USDC was on Friday. So the run looks like it has stopped. I don't know if there's a way to look at Can you chart the market cap change of USDC?
Yeah, so I'll do it on trading view because I know how to there. 2 seconds.
Because that'll be interesting to look at. But it's sad to see BUSD is slowly dwindling away.
So this is the market cap.
So a lot of redemption. Well, it's not even necessarily redemptions. That was just the. So it does look like 2 billion of redemptions, right? Because at 43 billion, it was $1, and at 41 billion, it's $1.
Yeah.
So there's been 2 billion in redemptions.
Exactly.
Can you pull up token supply?
That
may be what I'm really looking for here, because that gets rid of the price question.
So
on exchanges,
I've got the supply just on trading view. No, sorry, on CMC. So the circulating supply, 39.51 billion. And
which is what the market cap is.
Pretty much, yeah.
So so there's been a couple billion in redemptions since Friday, basically.
Yeah. Okay, yeah.
But it looks like the run has basically stopped.
I think so. Yeah. But also 3.3 billion is less than 10% of their overall collateral. So obviously they went to just below 90%, which 10 cents off a dollar is obviously 10%. So at one point they were over collateralized by how much essentially they dipped in price. So in a way, it was inevitable that they would have gone back up from 90 cents because they were, at that point, theoretically over collateralized.
Well, only if they could access the 3.3 billion.
Oh, no, because they have 40 overall, and 3.3 was locked in, was locked in SVB. And then when they went to 90 cents, essentially they had more dollars than their market cap. I'm getting confused, but yeah.
That's true. To me, the concern, and this is actually one I'm seeing if I could pull up their reserve report. BUSD's reserve report was really good. It gave the expiration date of every treasury that they owned.
Okay.
So you could see, here's this huge list of owned treasuries, and here's the maturity date of all of them.
Yeah.
I'm trying to see if I can. I would assume.
I'm having a quick
reserve
search as well.
Assertion report. Full report here. Because all of the treasuries they own are not necessarily worth what they will be at maturity. So if they were forced to sell, so this is what happened to Silicon Valley Bank. They owned a lot of long-term government bonds that they had to start selling at a loss because they had to access it for their customers.
I see, yeah.
So if Circle only owns short-term treasuries, they might be okay. Okay, so look at this maturity dates. This is what matters.
Yeah. Hold on.
What's the date of this report? Because that was maturity date was old.
Yeah. So hold on.
Is this
I think this is December 2022. So this is the most recent one that they've got.
So they only own treasuries that have 4 months out in terms of maturity. And if you look at how it's, if we assume that the time difference is the same then as it is now.
Yeah.
So if that was from December, that some of them matured in 4 months. It looks like almost half matured within 30 days.
Yeah.
So those are actually very low risk in terms of if you had to sell, you're going to get very close to what the maturity value is.
I see. Okay.
Now, Silicon Valley Bank owned a lot of long-term treasuries that they potentially had to sell for 50 cents on the dollar. And the reason for that is these long-term treasuries they earn a rate based on what the rate was when it was issued. So it could be 1%. But because interest rates went up so high, new treasuries pay 4%. So no one's really interested in holding a long-term treasury paying 1%. So you can either hold it to maturity and get all, the full value of it, or you have to sell it on the market for a discount because no one really cares about 1% interest. Does that make sense?
It does.
So it's kind of it's a Fed created problem here. Part of this is when the Fed jacked up interest rates super fast, all these balance sheet assets that like banks have or Circle or whoever, these lower interest paying assets started to lose value in the market, which is fine if you don't have to sell them. But if you have to sell them to raise liquidity, you could lose a lot of money in a hurry.
And so the people buying these treasury securities, how long can a maturity date be away? And are you guaranteed to get that money?
So like let's say the bond's $1, right? And right now you can get one that expires in 2040 and you could buy for 50 cents. You're guaranteed to get $1 in 17 years. In the meantime, you're going to get 1%. So you see how that's not a good investment.
No.
Right? When you could buy a newly issued one and make 4% in that time frame.
Yeah.
So that's why these, Silicon Valley Bank, like I don't know the specifics, but they held a lot. I do know in general, they held a lot of long-term treasuries that could have been 50% of what, they took customer funds. They did what any bank does. They take a portion of the customer deposits and they buy treasuries because they're safe yielding assets. And that's all good as long as now they don't have to sell them to meet the withdrawals from their bank.
Yeah. Yeah.
So Circle has a type of deal where 75% of their money is in treasuries, but it looks like it's all expires within 4 months.
Yeah.
So they're not going to have an issue where it's 50 cents on the dollar.
So,
because actually, I bet you could look up.
Yeah.
Government bond. Never looked this up before. Calculate the value of your bond. So let's say, I have no idea really what I'm looking. Yeah, it needs too many specifics. I'm just wondering if you know that they have a bond that matures in 4 months, and that's when they get the full dollar for the dollar, right? What would it sell for today is the question, because that's technically the hole that Circle has.
Yeah.
The difference between what they bought it for, what they can get for it today. And as long as they don't have to do that and they can just wait for maturity, then you don't have to worry. And because they don't have 10-year or 20-year bonds, it's probably a non-issue.
Yeah. I didn't.
Is that making sense?
It does. Yeah. I just didn't realize that this sort of thing existed. I just never really looked into it. But with the
so Silicon Valley Bank had that problem. They bought a ton of bonds at 1%, and they had to sell them to meet withdrawals until it became obvious that they were just losing money hand over fist, and they stopped.
Yeah, but they'd be losing money to an extent anyway with the rate of inflation at what it is at the moment, which is according to Google 6.4%. So that 1%. So why do people do this? Just because it's a safe option for a guaranteed small return?
Exactly. Because if you think about it, if you're the bank and you have $200 billion of deposits and you can take 40 billion and generate yourself a couple percent, especially because these were bought when rates were low, right? Inflation was low. All rates were low when those were bought. Now you could buy bonds that pay you 4% or whatever it is, 5%. I think it's like 4%. And get that. It's guaranteed money as long as you can hold it to maturity. It's not guaranteed money if you have to sell it early. And for them, it's, the customer deposits are the liability. So if the customer wants their money and you run out of the cash, you got to start selling bonds or whatever else they determine to be a safe asset. Could maybe, do they invest in companies I kind of doubt. But could they have invested in company debt that has lost value?
Yeah.
Like corporate bonds. I don't know what they invested in, but I know the treasury piece is a big issue for a lot of institutions, which is why what the Fed did this weekend was they said, okay, we don't want banks to have to sell these bonds for a loss. So you can go to the banks can go to the Fed now and say, I've got at maturity the full value of, $1 billion worth of bonds. So they can go borrow $1 billion from the Fed now. That started yesterday.
That's good.
So if they need to like access cash because there's a bank run or something, they don't have to sell the bonds to do it. They could just borrow from the Fed to do it.
Oh, interesting.
So it's an interesting way to plug the hole. Now, obviously, the bank is still paying a higher interest rate on that loan than what the bonds are paying them. However, at least they're not selling the bonds for a 50% loss.
Yeah. Do you have something over there called premium bonds? It's like a lottery.
I don't know about that.
Yeah, because over here, loads of people do this thing called premium bonds, where it's like a lottery with the government. So what you do, it's a chance of 24,000 to 1, and each bond costs £1. The interest rate from any winnings that you get should be around maybe 3.3%. The minimum that you can pay in is £25 and the maximum is 50,000. So it's meant for just consumers, retail, household, that sort of thing. And you can win prizes up to £1 million. I think it's more of like an older generation thing, because my parents are, I remember them. Yeah, they've talked about it. But
it's so like, do they get a guaranteed rate, but then they could also potentially win more, or no guarantee?
No guarantee. And you could just win never, but you could win your first time doing it.
There's a there's this like savings app here, and it might be available there too, where you put money in and you're pretty much guaranteed to win something. So the idea is like, you're going to get a higher rate than what you would normally get in a savings account, but you might just win a little bit versus win a lot, something like that.
So you could win a normal saving rate.
Basically, yeah.
Okay. Yeah.
Or isn't that what was that beefy finance product where you earned less yield than the
Moonpot?
That was actually Moonpots. That was actually a very cool product because you actually always earn. You just sacrifice some of your earnings for the chance to win. You're basically donating some of your farm yield to a lottery pot.
Someone else. Yeah, I mean, I used
never yourself.
Yeah, so I used that a little bit. So the AP, I think it was R, on the pots they called them. It was around half of what they would be on Beefy or something. So you get half the return, but then you'd be in a chance with winning a certain amount.
It's like an auto. Yeah, it's like an auto contribution lottery pool.
Yeah, it was clever. But yeah, unfortunately they've stopped now. But hopefully something like that will come up again. But yeah, I never won ever. But obviously there's huge whales in there, and I'm like putting in like $10, thinking I'm gonna hit it big. But yeah, that was fun. That yeah. I missed that a little bit, but never mind.
So at least just kind of closing this loop on the USDC thing, it looks like all their bonds are very short term.
Yeah.
So they've probably held their value very well. They're close to maturity. So if they had to start dipping into them, so like my worry with them Friday was, only 10% of their reserves are like locked up or whatever. However, that was like almost half of their cash.
Yeah.
So they'd have to get into start selling bonds very quickly. So then the question is, well, what's the actual value of their bonds? How far out do these bonds go? Because I do remember looking at the BUSD report. They had some far out bonds. Let me see if I can find that.
Okay.
And I remember looking at that thinking that is actually a little concerning. Let me see if I can find the maturity dates. Let's just look at March 9th. Man, they put out a lot of reports. Okay, I found it. U.S. Treasury debt maturity date 2053.
I've got the same one. Yeah, I'll share that on the screen. Hold on.
So that $95 million is not worth $95 million.
Yeah. So, yeah, the maturity dates.
Their bonds are
very.
So obviously they've got 2.8 billion in short term. That's the top part of the column. If you go a little bit up, right there, and then they have basically 5 billion in long term. Do they even have any cash anymore? And they have less than $1 billion in cash. And my hunch is that all this shrinking down, they can't sell these long-term bonds because they're not worth the dollar on the dollar.
Yeah.
So they're having to just bleed their cash out. And next, they will bleed out their short-term treasuries.
So they're just going to make a very slow loss, and they're going to sell essentially when they can.
Yeah, I mean, I don't know how they're like. If I were to look at, I wish we could look at.
But
okay, here we go.
Is this Paxos though? It's not Binance.
Well, according to this, their market value of these long-term bonds is higher than what they invested. I'm not understanding how that works.
So what the notional, hold on, I'm just going to share the screen just so people know what we're talking about. So the notional position value, does that mean their original cost and the current market value of?
I think so, yeah.
Okay, yeah. So essentially they've got 90 million over collateralized with the market value of these bonds.
Yeah. So
okay.
I guess they could raise up the money according to this. So that's good.
Yeah. Yeah. It's complicated, isn't it? I wonder who. I wouldn't like to be the accountant working all this out. It's yeah. Okay. So after this is over, you just get the original, well, the original money back. So where does the government just prints money for you?
Well, it's a debt product.
Okay.
So a bond is when the government sells a bond to borrow money from the bond holder. Right? So that's how governments, borrow money, is they issue bonds. And so they basically say, all right, we're going to borrow $1. While we have this dollar, we're going to pay 2% on the, interest, annual interest. And then at the maturity date, whoever owns the bond at that time gets the dollar.
I see. Sneaky.
They pay back their loan.
Yeah.
Sneaky.
Yeah. Interesting. I need a long, hard think about this. They could just print loads of money themselves and just give it to themselves. No one would know. Well, people would know, but
I don't know if it would work if they did that. They gotta borrow it.
But I know this is not completely off topic, but why can't they just type in a couple of extra O's in their bank account?
Because if they did that, then nobody would be willing to buy their bonds or hold their bonds.
Oh,
and right. So you would lose faith in the dollar.
Yeah. Just don't tell anyone.
This is all built on faith.
Yeah, I know. That's the thing. People just believe it's worth
the economy. Yeah, it's built in belief that that you'll get that good decisions will be made and the economy will make this value make sense.
Yeah.
Essentially.
Well, hopefully people keep on believing in money and keep on believing that it is worth $1. Otherwise, it won't be worth $1.
Well, it'll still be worth $1, but
yeah,
it won't be worth whatever it could buy you.
It won't be worth the same bread and fish as it was back in the day.
Like right now, $1 can buy you 2 eggs.
Yeah, why are eggs so expensive in America at the moment?
Don't know. Maybe the chickens or the hens are going on strike. They're unionizing.
Yeah, well, there's news about the eggs over in America in English newspapers.
What does a dozen eggs cost you? Do you even know? It's hard to know because it's something you just add to your groceries, right?
So
like what?
I think I normally buy a pack of 6, and that's about £1.20. So a dozen would be £2.40.
I'll tell you like Walmart, which might be the cheapest eggs you can find.
Okay.
Right now, a dozen eggs is, well, do we want medium-sized eggs, large eggs? We'll just go with 18 eggs for about $4, 12 eggs for $2.96. So the price has come down.
Yeah.
And I wonder if there's a egg price index.
So over here you can get 12 eggs for £2.10.
Oh, quite a bit cheaper actually.
Yeah.
Oh, I wonder if you can I'm going to send you a link for you to share your screen with. We're way off crypto topic here, but this chart is fascinating. Now, I live in a place where stuff is cheaper, right? Cost of living is lower. So if we're looking at the average dozen eggs is almost $5 in January.
What?
So this is delayed. Like there's 2 months of data not here.
Yeah. This is interesting. Yeah, so the price of eggs has shot up.
But like the year I was born, you could get a dozen eggs for under $1.
Yeah.
So it's 500% in 35 years. Not that crazy. Eggs have kind of stayed cheap.
But
you think about it.
I assume that it doesn't account for inflation. So sort of between, 1980 and 2000, eggs.
It's basically.
It would.
Yeah, the same dollar price.
Yeah.
Eggs were almost like a stable coin.
Yeah. That it's good, isn't it? Yeah. And then they've shot up. They've done a USDT. How bizarre. Amazing.
So I don't know what is actually leading to it. Like, do we just eat more eggs now?
I thought you might know. Being in America.
I mean, I eat a lot of eggs. I eat like 2 eggs a day. Just slinging money around buying eggs here.
Yeah.
What is causing the egg price? Let's find out.
Cost per dozen.
I mean, obviously, I just told you that basically eggs are $2 cheaper than what that price was where I live.
Yeah. Yeah.
Oh, bird flu. So bird flu broke out in in South America.
Okay.
Also, like chicken feed is costing more. So just in general, things are costing more right now. But I think bird flu made it worse. They've had to contain it. I think they had to kill, if you've got a farm of like 10,000 chickens, you might have to kill 5,000 chickens because 1 or 2 gets bird flu.
And you mentioned chicken feet as well. Is that like a big
chicken feed?
Oh,
like feeding the chickens.
Oh, I thought like Americans.
We don't eat.
Okay,
we don't eat
fine.
the feet.
Okay, yeah, because I know some cultures do. I never knew. Right, chicken feed.
Chicken feed inflation. So I do think though. So at least compared to the average national cost 2 months ago and my cost today, it's already like 40% lower. But I don't know. I don't know who's buying these expensive eggs.
No, me neither. On the same website, recommended article.
Buying eggs with Bitcoins?
Yeah.
Why is that? That's really a chart?
Yeah, buying eggs with Bitcoins. It tracks the price of eggs specifically. What? Okay, so this is they've got a chart for buying eggs with Bitcoins. So you can see that Bitcoin price is obviously, well, the value of Bitcoin has risen loads. So like here you could buy one egg for loads of Bitcoins, but then obviously your Bitcoin here isn't worth as many eggs. Oh, who does this?
So what we should be doing when at the next bull run, you got to start just unloading your Bitcoin into eggs.
Yeah.
Yeah.
I'm amazed. Wow. Charts like this exist. It's bizarre.
The eggs to Bitcoin chart is fundamental to
eggs to Bitcoin
finance.
Like, who would have? No way. What? No, okay. I must have gone on a different graph because Bitcoin doesn't go back to like 1980. No, that's just normal egg price. Oh, and this is the Bitcoin price. Okay, fine, good. Anyway, yeah, this is listeners, if you're interested, you can. If you're tired of using like BTC to USDT, you can use BTC to EGGS. Exactly.
That's good.
My new favorite chart.
I mean, should we really that should be a standard setting for all crypto, like,
to eggs.
Yeah, Ethereum to eggs, ETH to EGG.
Yeah. Wow. Yeah. Well, there you go. That's learn something every day, and that's what I've learned today. That there's a pair, which is eggs, for crypto. So, yeah, what pair are you looking at? Well, the egg pair. Fantastic. Anyway,
do you think I could set up grid bots based on the egg index? Because eggs seem to be an inverse asset to other markets, which would make it a very interesting trading pair as the prices move inverse of each other. Like stock market's down, eggs up. Bitcoin down, eggs up.
I'm sure there's somewhere. I mean, there will.
Oh, there will be. Remember, like when people were trading lumber back in 2021 lumber futures. I'm actually surprised. Well, if FTX still existed, they would probably have an egg futures product.
Yeah, I think it's really good versus eggs.
I'm actually pulling up TradingView to see if we can chart the egg index.
Yeah, it's going to be like, if it does exist on TradingView, it's going to be some weird ticker, and it's going to be like NJ44 or something, not just eggs. But if they did have eggs, that would be fantastic.
There's a lot of things in Egypt coming up.
Oh, we wouldn't.
There's a token called Funky Egg on QuickSwap.
Okay,
so that's a Polygon token.
Okay, quick egg.
Of course, egg pulled up like a ton of weird cryptos.
Yeah, it would do. There you go. Listeners, tomorrow we'll try and have an egg index on TradingView, if it exists, obviously. And also, if you're interested in making your own index on TradingView, all you need to do is decide, well, what currencies or whatever do I want within this index? And you say, if we wanted GBP against dollar, what we'd do is GBP USD multiplied by GBP and let's say AUD, and then you just keep on multiplying them like that, and then you'd generate it, which is enter. And here it is. I can only view one day at a time though, and it gives you an index for those currencies or products that you've put up here, which is good. But yeah, to get closer in than one day, you need to upgrade. But you can make your own indexes just by multiplying symbols. Yeah, interesting. Anyway, so I know that we've sort of sidetracked a lot, but that's the overall story of what's happened this weekend, and it all comes back to eggs at the end of the day. That's the lesson learned. Before we say cheerio, Ben, is there anything that you'd like to raise?
No, I think covered a lot. There's a lot going on. It'll be interesting to obviously watch crypto prices from here. Any bank industry news. I'm going to keep an eye on the price of a dozen eggs.
Yeah. Good.
And I do think that, I don't know, this crypto move is weird to me. Doesn't feel right.
No.
It's like an overcorrection from the fear that happened.
Yeah.
Right? In a way.
It's rebounded very fast, and obviously it's completely against what the traditional markets are currently doing. Yes, it's something's not right. Well, we'll see. Tomorrow
we'll see.
Yeah, tomorrow holds interest. Anyway, thank you very much to viewers, as always, for tuning in. Vanessa Hudgens, thank you for your comments and things. See you tomorrow. And Ben, thank you as always. Speak soon.